Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Before I forget, don't forget to subscribe to my channel and like this video. That will be awesome. And take a second, pause and spike that like. So today I'm going to be talking about what happened in the markets last week, and I'm also going to be mentioning how my portfolio performed overall. So last week was again another up and down week, and it was generally a negative week overall for the stock market, with both the S&P and the Nasdaq down about 0.3%. This was the second consecutive week that the S&P 500 has been down, and the third consecutive week that the Nasdaq 100 has been down, especially because of those fears around interest rate hikes and also rising inflation, which has had a big effect on some of the growth and technology stocks. But our portfolio performed pretty well last week actually, and we were up about 2% overall for the week, which outperformed those major indices. And that is because I had some stocks that did particularly well last week, and also crypto towards the end of the week began to rally slightly off the lows of the earlier part of the week. One of the reasons for the outperformance of our portfolio last week was that we did many different crypto trades, and we managed to close about 7 of our 8 short-term crypto positions in a profit. That was because there was a lot of volatility in the crypto market last week, and we saw at the earlier part of the week, we saw a lot of the different crypto prices reducing down quite significantly in a spike down. This allowed me to be able to take positions and then to close them again on recovery. So this was very good for our portfolio and helped our outperformance. I managed to open and close some positions in both Solana, Bitcoin, and also Polkadot, which made up the majority of my short-term crypto gains last week. As we move on to our global weekly market update, and I will start off in the US. As I mentioned, both the S&P 500 and the Nasdaq were both down last week, and that was to do with a lot of inflation fears and also fears about an increase in the number of interest rate hikes. And this caused a lot of worried sentiment overall in the market, especially affecting those in growth stocks and technology stocks overall. And at the earlier part of the week, we saw Jerome Powell, which is the head of the Fed. He said that the Fed would do whatever they could in order to be able to try to quell some of that inflation. This was later backed up by Lael Brainard, who is the governor of the Fed, who also said that they're going to do everything in their power to try and keep inflation in check. And this is a very startling difference to the beginning, the beginning of 2021 and kind of the mid-level of 2021, where they were saying that inflation was transitory. So they know that they have a problem on their hands, and they are trying to do whatever they can to be able to sort that out. And I think that generally the markets are pricing in potentially 3 interest rate hikes in 2022, if not 4 interest rate hikes in 2022. And I think the reason why they made these comments at the start of the week was on Wednesday, they announced that the inflation numbers and the CPI numbers, which is the inflation reading, and the CPI number was at about 7%, which was mainly in line with consensus estimates. And actually the market reacted fairly well from that, because I think they expected that the inflation rates would be slightly higher than that. So there was a bounce back on Wednesday after that. However, this was still the highest year-on-year inflation rise since 1982. So it's still a very unprecedented amount of inflation. So we must always bear that in mind when we look at the market reactions overall in the stock market. The core inflation figures, which excludes energy and food, came in at about 5.5% year-on-year increase. And I don't pay too much attention to this particular inflation statistic because, let's face it, we all use energy and food on a day-to-day basis. So you can exclude a lot of things, but generally I think inflation is a lot higher than that. We also saw some statistics which said that second-hand cars in the US actually went up by 40% on a year-on-year basis, which is absolutely staggering. This has been quite good actually for one of our stocks in our portfolio called 𝗳𝗶𝗱𝗄𝗃, which does a lot of second-hand car sales. And dining out costs also went up about 6% on a year-on-year basis. And that is because the cost of food has increased and the cost of wages have also increased for the staff members within the restaurants. So overall, inflation is running very hot at the moment. And have we peaked? I generally don't think we have peaked yet, but I don't think we are going to get extremely high. I'm not worried about things like hyperinflation or anything like that, but I do think that it could edge up a bit higher over the next couple of months before they start to put in those interest rate hikes and they start to reduce the amount of bond purchases in terms of tapering. There was also some data released which said that retail sales actually were down 1.9% from the previous year. And this is largely to do with the Omicron spike in the US, in which a lot of people are trying to limit their amount of exposure to other people when they go out shopping. However, it was said also that there was a reduction in the number of online sales as well. So it's something to keep an eye on. But I expect that as Omicron improves at the beginning of 2022, I expect those retail numbers to hopefully increase. Although retail inventories did increase by 1.3%, and I think that is for two reasons. One, I think that is because there is a direct correlation between the number of sales and the amount of inventory. So there was more inventory left over in the suppliers. And also I think that there is an easing of the bottlenecks that had been in place over the last kind of 6 to 9 months in the economy in terms of the supply chain. So overall, I think that is easing. However, we did see the jobless data in the US increase slightly last month, although this must be taken with a pinch of salt because we are still at very high levels of employment in the US economy. As we move on to Europe now, and generally the European markets were down last week, albeit UK market was slightly up for the week. And there was a number of different reasons, but one of them was around Omicron. Obviously the cases are surging around Europe. However, some of the countries are starting to put in some kind of endemic friendly regulations and restrictions around COVID. So the Netherlands have opened up the previous lockdown in the country, and they've opened up to some non-essential services and shops now. So that is beginning to open up. We also saw some countries such as the UK and Norway, which have reduced their amount of quarantine time for people that have been infected with COVID-19 and Omicron to just 5 days. And France eased restrictions on passengers coming to and from the UK into France. And I think generally, overall, the European countries and governments are softening their stance on restrictions of travel around the world, and also some of the restrictions in place to try and stop the spread of COVID-19 in order to be able to keep their economies thriving and functioning very well. I think also the fact that the hospitalizations and the death rates are largely in check. This gives them confidence to be able to continue being open and manage the spread. And I think by reducing the amount of quarantine time, they are trying to stop the amount of people not being able to go into work, and this have an effect on the economy, especially if their symptoms do not become serious. There was also some data released from Germany last week, which said that in 2021, the German economy expanded by 2.9%. However, this is still slightly below pre-pandemic levels, and they hope in 2022 to be able to surpass those pre-pandemic levels and go into an area of growth. However, data released from the UK was quite the contrary, and it said that the UK economy had increased by about 0.9% in November overall, and the UK economy was up about 0.7% overall since the pandemic onset. As we move on to China now, and last week, just like the rest of the world, the Chinese stock market was down slightly for last week. And again, there is a lot of fears still around the real estate industry overall in China. And banks in China are becoming very selective about real estate projects that they will fund. And they require a lot of collateral before lending money overall to these real estate developers. So this is putting them in a tight liquidity space, and they are having to find other ways to raise money. However, consumer and producer inflation actually decreased last month overall in China. And this was actually seen as a fairly positive sign overall in the economy, because it sparked a lot of hopes that the Chinese economy, that they would continue to do easing measures in China, such things as reducing the amount of the reserve ratio requirement in China, and also reducing the interest rate loans on small and medium enterprises in China, which really helps stimulate the economy and also helps to provide liquidity as well. And that is one of the reasons why I'm very bullish on China overall in 2022. And that is because as countries around the world, they start to tighten their monetary policy, China is starting to ease theirs. And that can be seen completely as the opposite of what's happening in the rest of the world. And I think that with valuations being very attractive overall in China, and if they start to do easing measures and the businesses in China start to thrive as COVID-19 hopefully starts to ease around the world, I think this should be really good for the Chinese economy and excellent for our stocks in our portfolio. So although some of them underperformed in 2020, I expect them to do very well. China also suspended dozens of international flights coming into China, and this was try to alleviate some of the spread of COVID-19 around the country and the spread of Omicron. And Hong Kong, which had previously not experienced many cases of Omicron at all, has also suspended some of its international flights as well and is making restrictions. And this is having an effect generally on China and Hong Kong as the tourist industry is slightly weighed upon. As we move on to our top 3 performing stocks of last week, and our top performing stock for last week was Canadian Natural Resources, which was up by about 9.8%. And that was largely because the oil prices were up last week, and they are now roughly in line of where they were in October 2021. The second best performing stock in our portfolio last week was 𝗳𝗏𝗯, which was up about 8.2% last week. And our third best performing stock last week was JD.com, which was up about 8.1%. As we move on to crypto now, and last week, as I always say every week, the market was a bit of a roller coaster last week. And the week started off quite badly actually for Bitcoin because there was a lot of fears around interest rate hikes and increased speed of those interest rate hikes, which put pressure overall on growth assets such as growth stocks, but also crypto, because they are seen as a risk on asset. However, as the week progressed, there was some different news that came out, and one of them was around the inflation figures. Generally, inflation is very good for Bitcoin because Bitcoin is a scarce, finite asset and is a hard asset. And this means that a lot of people invest in Bitcoin in order as a store of value or as a flight of safety, instead of keeping the money overall in savings. However, this does have a negative effect as well, because the higher inflation rate is, the more likely and the quicker they are to increase the interest rates. Also, we saw some other news from Brazil, in which Rio de Janeiro said that they were going to put 1% of BTC overall on the government balance sheet. And also they said that they would provide a discount on tax overall for people that use Bitcoin as a currency. And again, this shows a friendliness of South American nations to be able to adopt Bitcoin, especially considering what we saw El Salvador do last year, where they made Bitcoin a legal tender. So Bitcoin bounced back after that earlier dip in the week, and it was up about 4.5% overall for the week. We also saw some dips earlier on in the week as well in altcoins, which sold off even more so than Bitcoin did, and that is because they are even more seen as a risk on asset. However, we did see some good bounce backs of some of those altcoins, especially in Cardano and Polkadot, and there was a nice bounce back towards the end of the week. It was also announced by the hedge fund billionaire Bill Miller that he had over 50% of his overall net assets overall in Bitcoin. And this is showing a growing trend of billionaires and institutions coming into Bitcoin. And I really think that 2022 will be a year of maturing overall for the crypto industry. So it's really good to see new money coming in. We also saw Bitcoin mining again hit all-time highs last week. And this is still quite amazing to me to show the anti-fragility of the overall Bitcoin network, because just in May 2021 was when the Chinese banned crypto mining inside the country. And this caused a mass exodus of miners to relocate to areas around the world. And we saw a big dip in hash power then. However, to get back to that all-time high so quickly, it really shows the strength overall of the Bitcoin network. So it's going from strength to strength. We also saw some data release which said that Bitcoin mining hit its record levels of revenue in 2021. And it was actually up to about $15.9 billion worth of Bitcoin mining in 2021. And if we compare that to the revenue figures for 2020 for Bitcoin mining, that was at about 5 billion. So we are seeing exponential growth in Bitcoin mining services. Also, in line with the trend, banks are increasingly becoming more crypto friendly. And last week, a high profile analyst from the Bank of America actually stated that he expected Solana to become like the Visa of the digital space ecosystem. And that's really in line with what Solana is trying to do, because they have very fast transaction speeds and they have very low transaction fees. Lastly, the long-standing legal battle between the SEC and Ripple continues to rage on. And last week, the SEC was summoned that they had to provide an email of the draft speech in which they said the previous director of the SEC, William Hyman, he actually stated that Ethereum was not a security. And Ripple are really going on this argument with XRP that it should be considered a non-security, just like the SEC said that both Bitcoin and Ethereum were both not securities. And this would really, stop the case if they were considered not to be a security. So it's very interesting to see this develop, and we're expecting an overall decision from the case. I'm expecting it in the first quarter of 2022 or the very beginning of the second quarter in 2022. The markets overall have been quite difficult throughout December and also early part of January. I'm trying to battle these markets as well as I can in making sure that I have the right allocations and I'm keeping disciplined to my overall strategy. But it's not really a time to get alarmed. I think we've gone through periods which are just as volatile in the past, and we've always come out of the other side much stronger. So please believe in me and my overall strategy, and I will continue to keep a calm head and navigate you through these storms. But I was generally overall pleased that we saw a bit of progress overall last week. I also had the pleasure of conducting our 4th eToro Popular Investor Forum, in which we do quarterly with some really talented popular investors from throughout the world. And I'm really excited to be able to deliver you another episode on my YouTube channel next week. And we have some really interesting topics of discussion in there, and we make some bold predictions for 2022. So keep an eye out for that. Thanks very much for listening to my video today. And again, don't forget to join my Discord group, where you can talk with hundreds of like-minded investors, and we have a lot of fun and talk about many different interesting discussions. So you can see the link for an invitation below in this video. Thanks very much and have a good week ahead.